Hey, welcome back to Getting Rich Together. I'm your host, Shama Bunton. And ladies, today I'm inviting you to something big. I'm inviting you to a movement. We just wrapped a sold-out, unforgettable gathering in San Francisco. 140 women, 11 bold conversations on stage, and over 800 connections sparked. We were featured in Fox News, NBC, and with this movement, we all felt it. We are building something real. And now, it's New York City's turn. On May 13th, we're coming together at the MasterCard HQ in the heart of Manhattan for the next Wealth Catalyst Summit. This is where women come to preserve, build, and invest wealth, not alone, but in community, in it together. And here's what sets us apart. You won't just sit and listen. You'll be curated and matched intentionally with other women who share your ambitions. Our peer matchmaking connects you based on what you're building, learning, and investing in. Walk in with questions and walk out with collaborators. You'll hear from women who are doing the work, buying businesses, raising capital, investing in real estate, collecting art, backing Broadway, and so much more. Come to be inspired, come to be matched, and come to get ready to move your capital. Tickets are on sale now at wealthcatalystsummit.com. Claim your seat in the room where women rise together. And now, let's get on to today's episode.
Welcome to Getting Rich Together, the show for successful women who are looking to take their financial futures to the next level. I'm your host, Shama Bunton. When I started my wealth building journey, nobody knocked on my door to give me all the answers. So I want to talk to the experts who've done it and bring the answers to you so we can discover the right opportunities that will help us achieve the financial futures we've always dreamed of together and have fun doing it. So let's dive into this episode and start getting rich together.
The infamous and incredible Jenny Fielding. Jenny, congratulations on all of your success with the launch of your new book, Venture Everywhere. This is such an incredible book with such a fantastic series of stories with your own personal experiences, which is one of the reasons why I'm also so excited to have you today on the show. Jenny, everyone who's listening not only knows you as a badass investor, co-founder, and managing partner at Everywhere Ventures, but also as an exited founder. You are a community builder. You are an incredible speaker and someone who I admire deeply. Thank you for being here today on Getting Rich Together.
Thank you for having me. This is like long time coming. So I feel super grateful to be here with you.
Oh, wonderful. So Jenny, let us go back in time, not to the powerful woman that you've been as an adult, but to a young girl who maybe wore pigtails or a high ponytail at one point. She was somewhere between 7, 8, 9, 10 years old. Jenny, where were you living? What was life like? What were your parents like? And what was money?
Yeah, so I actually grew up in Manhattan, which is somewhat unusual. I actually live on the same block that I grew up on, so that's really fun. And I think what's interesting about our family, as many families, when previous generations had immigrated, it was all about building wealth and stability and this foundation. And I think when it got to my parents' generation, there was like a lot of freedom. Both my parents were professionals, but I think that they didn't grow up with that anxiety maybe around finances. And so, without revealing too much, I think sometimes when you work for yourself, the flip side of that can be not having a great grasp on like where your income's gonna end up. And so as a young child, I have this very strong memory of my parents who were great parents and great providers, but them being very stressed when it came to tax time because they hadn't necessarily saved that money or put it away in the right way. And so there was always this panic. And I just have this memory of like the table just being full of stacks and stacks of papers. I mean, this was obviously before all the electronic, everything.
Totally.
And so it was just like stacks and, they didn't really lay it on me, but I just remember having like a lot of anxiety because I knew that every quarter when they had to do their quarterly, there was this ominous accountant that would come to our house and the papers would be everywhere. And it just like put a pit in my stomach as a young child, not understanding what was going on. But I think the stress and anxiety. And yeah, I mean, I don't want to dramatize it. They were both professionals. There was definitely enough cash, but it was just not really knowing where things were going to end up and how they were going to pay that next tax bill. Right?
You know, I can just imagine you as a little girl with like all this cash around you and being like, what is this? Like, what? I mean, it's such a different experience from like young people today who will probably never see like paper, you know, and like what a cool young experience for you to have. And certainly growing up in Manhattan at that time, it's also a really unusual way to grow up in terms of what you saw around you. You know, your parents being entrepreneurs, did they have other entrepreneurial friends around them? Did you sort of go to school with friends who were more in, let's say, working at a big job or sort of offices? What was the environment like?
Yeah, well, let's call them entrepreneurs 1.0. So they weren't tech entrepreneurs. My father was a doctor, right? But he worked for himself. So there was an office that he went to, although it was his office, right? And it was actually in an apartment building. You like see those like ground floor when you walk down the Upper West Side or East Side and you see those little plaques. I mean, that was how it was, but it was his, you know, he had to kind of create his own business. And my mother also owned her own business. Again, they weren't tech entrepreneurs building software. They were small business owners trying to provide what they did, you know, services and products, but in a very different way. Actually, I talk about this in the book. My grandfather owned fruit stores in Brooklyn. And so there's like a lot of colorful description of my grandfather and his fruit stores and the mafia and like the dogs he had. And like there was all that, right? Because fruit stores make a lot of garbage. And then my grandfather on the other side, he was an accountant, but he also worked for himself and he had his business in the basement. There was a lot of small business inspiration, I guess, for me growing up. The model was really work for yourself, control your own destiny. But I'm not sure everyone had the financial wherewithal to manage in an effective way. I mean, I think when we're building businesses, we're really focused on those products and services. We don't necessarily have all the tools.
Absolutely. And so as you were starting to define yourself into the world in high school and starting to get ready to think about maybe what it is you did want to be when you grow up, though I'm pretty sure we still never know what we want to be when we grow up. Did you know you were going to strike out and sort of start to build a career in this way? What did you know of yourself at that time in high school?
I think I had a lot of inspiration, again, what the model was, work for yourself, control your destiny, but I didn't really know how to get there. And so like many people in my position, I took a very traditional path. So I ended up going to law school and working in finance. So probably like the opposite, big company person, big potential career, but definitely not working for yourself. And it was a great foundational experience. I think you learn a lot at those big companies. You learn what it's like to work on teams. You learn a lot about office politics. You learn a lot of substantive great things about the industries that you're in. But so much of it is like managing dynamics. And I think ultimately I love to work. On Friday, I get sad because I'm like, oh my God, people won't answer my calls on Saturday. So I do love to work. What I realized ultimately is that I want to work for myself, right? If I'm going to put that effort in, if I'm going to be that charging force, I want to be the recipient of the work that you do. And I think that can be hard when you work on a team in a big company because you're kind of part of a bigger organization or you feel sometimes like you're not necessarily making an impact. And I really just wanted to make an impact. And I think when you run your own business, you chart your own territory.
Absolutely. And so as you were sort of in those university years and starting to figure out your areas of curiosities and what you potentially wanted to do, did you find yourself having any part-time jobs? Were you heads down in your books? Was Jenny the head of the speech and debate? What were you sort of interested in and how did you choose to spend your time?
It's interesting. My early part of my career definitely went much more traditional. But when I started my first company, I actually bootstrapped that. So I really had two jobs at that point. Growing up, I had side jobs and in college and all of that. But I think what was really fundamental is when I started my first company, I was still working at JP Morgan during the day. So imagine banker in the morning wearing her little suit to work and then coming home and becoming a tech entrepreneur from 8 p.m. to however in the morning and then doing that again. I bootstrapped that business mostly because there wasn't a lot of capital in New York at the time. I mean, it wasn't a great tech ecosystem, if you can believe it, 2007. I didn't really know the model except for making money to sustain your business. That was what I'd seen growing up, right? Everyone was like running small businesses in my family. And then obviously when you work at a big company, you see how that all works. But I didn't really understand this idea that like someone would give you money, but you wouldn't be at cash flow positive. So I didn't really understand that concept. We did end up raising in my first company a small angel round, but that was after we had revenue. So we bootstrapped it. We worked out of our apartments. We got the product out there. We were actually making money. And then we had opportunities. We had interest from investors. And all of a sudden the light went off of like, oh, you can like leverage this money and use it as a crutch, but as rocket fuel to grow faster. And so I kind of learned that lesson early. But again, I was like a bootstrapper. I was working at JP Morgan. So I was actually making a bunch of money and I was just pouring that into obviously supporting myself, but then supporting the business.
So that first job at JP Morgan, obviously so much of our narratives of our lives are kind of always increasingly stepping into our power, what we can do, negotiating, asking for more. At that early stage in your career, did you take the first offer you got at JP Morgan? Was there any sort of negotiations in there? And how did you sort of build up the courage to say, okay, I'm now going to start this business? And was it scary for you? I mean, obviously moonlighting at night, I think is such a great way to like have a sense of safety as you're bridging that. But I'm curious as to like your mindset going into JP Morgan, and then also how you weaned yourself off of JP Morgan to fully step into the greatness of your first business.
I've always been someone who's been, on the one hand, very curious about different industries, different ways the world works and all of that. So a very curious person, and also someone, as I mentioned, that just likes work and learning and all of that. I had actually gone to law school, and most people then go into the practice of law. But I thought, well, the lawyers work pretty hard, but like the bankers work hard, but they make a lot of money. So like maybe I could become, maybe I could go into an investment banking. I didn't know anything about it. And so I decided I'm going to apply to all the analyst positions at Goldman, at JP Morgan. It was all MBAs in those application pools. So I was actually pretty surprised that I got offers from most of them, but I decided to go where I did really because I liked the people, the team, and the process. That's been also a driving force in my life, is all about people. And so, yeah, maybe some of the offers were better, but I really anchored it on, wow, this seemed like a really interesting team where I could learn. Didn't seem like typical banking sweatshop. JP Morgan at the time had just gone through a bit of a come to Jesus moment for themselves. So I think that they were thinking about how to integrate and bring in more women and more diversity at that time. So it felt like kind of a good place to be. And it was a great experience. That's the interesting thing about my career, is that law, finance, startups, they've all been great. And so as I've moved from one to another, it hasn't been like, oh, get me out of this. This sucks. Like, I actually really loved working in banking. I thought it was fascinating. I worked with a great team. I learned a ton. I made great friends. It was great. I just never really saw myself as part of the establishment there. And I think when you take that pressure off yourself, in a way you can really thrive because you don't care as much about the outcome. You really are just going through the process and enjoying the process. Maybe that's a very privileged way to think of things, but I wasn't thinking about becoming a managing partner at JP Morgan. I was thinking about, wow, they're paying me like a ton of money to learn. What a privilege that is. And how cool is that, right? And so I'm just gonna, but if you have that framework, then it's like, it just takes maybe some of the tough part out because you're like, this is awesome. I am getting to have a front row seat of like, some really interesting opportunities and learning. So I actually really loved it. It wasn't a grind for me. I think ultimately I kind of saw that maybe I didn't necessarily fit in there, or I didn't necessarily see myself as part of that organization long term. But for the years I was there, I thought it was really great. I always tell this funny story that you had to wear a suit to work, which was very not my nature. So I would wear the suit, but I'd always wear my Converse red high top. The managing director every morning when I'd walk in, like roll his eyes and just be like, oh, Jenny and looking, shoes. And that was like my little way of having personal expression, because at the end of the day, there were really no clients coming into our office, or not ones that I was seeing at such a junior level. So it's like, what could they actually say to me? I was like doing my work. I was a high performer, but like I had to have that little Jenny wink wink.
Living in New York has never been cheap. It costs a lot. And early on in your career, were you a big saver? Did you have sort of in the back of your mind that, okay, I'm going to be 401k out the bat, saving my dollars, saving it for something, saving it for the startup you were building? How were you treating your personal finances so early?
Yeah. I think that goes back to, the model I saw growing up. And because of that stress that I saw in our family and just seemed very unnecessary and somewhat uncomfortable, I just went the opposite. The idea of debt or living above your means or credit card, all that kind of stuff just had no appeal to me. So I kind of just decided that I was only going to live on the money that I could make. I didn't live in a big, even though I was a banker, I lived in like a very teeny apartment in Chelsea before Chelsea was super nice, walk up apartment, had a roommate, and just lived a very modest life. And quite frankly, I still do. I own some property. I have no mortgages, and that's not necessarily good. I think we could talk about the other side, which is like, it's not the best way to live is debt free necessarily. Why not take advantage of things like low interest rates and all of that? But like, I just didn't do it. I always wanted to live just within my means, going back to some of the instances and feelings that I had growing up, thinking like, this is unnecessary, this stress. Like we don't have to live this way of just not knowing. So I was just decided I was just going to be on top of it. And again, didn't necessarily make great financial decisions because didn't take advantage of a lot of opportunities, but never wanted to be in that position that I saw so many friends kind of living paycheck to paycheck.
And then you decide to start putting your toes into some high risk opportunities. So you go from being risk averse and kind of protectionist and let's say live and be in this certain lifestyle, and then decide to start to shift your interest in your career into something that is on the other side of risk, which is like, let's go after it. So how did you reconcile?
I don't know. It's so funny. I have the highest risk profile when it comes like super early stage. Our loss ratio is like nothing that bothers me. Companies go out of business all the time. We lose money all the time. Totally fine. I have a lot of my personal cash in our fund. So like, it's not just I'm losing other people's money. I'm losing my money. Totally fine. And then in my kind of personal life, super conservative.
So how did you emotionally? So obviously working a 9 to 5 and then a 5 to 9. So you're working all the time. You are building out this new business. Talk to me about did you set aside a certain amount of time and money to say, I'm going to wait and do this for this amount of time, and then I'm going to quit my job? How calculated were you in hedging your own risk of moving from corporate employee to startup?
Yeah, I wish I could tell you that there was this plan, but it was funny. Like we launched our company, we had revenue, and like my friends were like, I think you better quit your day job. And I was like, why? This seems to be working really well. And they were like, because like, I think that's going to get you in trouble at some point. You literally are creating a brand for yourself and all these things. So it really wasn't very planful. And that seems to be my pattern. So I repeated that. So I worked at a firm called Techstars for 7.5 years. And while I was there, I developed the thesis for Everywhere Ventures. And I wanted to test that thesis before going out full time on my own. And so my co-founder and I launched 2 proof of concept funds where we actually, raised money, deployed capital, built a brand, built all these things. But we both had full-time jobs, and we did it with the blessing of our employer. So it wasn't like a JP Morgan working nights and weekends. But I guess I'm someone who personally has fear. Maybe it's a little insecurity. Maybe it's just someone that likes to test and iterate and make sure that there's a market there. Like, I'm not really sure, but I wanted to be super sure that we had something that was differentiated, that founders wanted, that LPs wanted. Again, at some point, I think my co-founder and I looked at each other and we're like, I think we got to do this full time, creating this brand, this fund. And there was like a little bit of push by everyone, honestly. Techstars to say like, it's time for you to go on your own, by my community saying like, hey, Jenny, I think you got this, by my co-founder. So there was definitely a lot of pull. And I guess I just have something kind of holding me back a little bit where I just couldn't go all in until I felt like I had some of these pieces in place. Seems to be my pattern of like, I bootstrapped a company, then I bootstrapped a venture capital fund. So it's kind of my pattern, I guess.
I think that's wonderful. And so Jenny, as you are obviously building your startup and in growth mode and structuring this business and having it be your first one, when it came to sort of setting up both the exit and sort of educating yourself on how you were going to manage leaving this business, selling this business, and sort of the identity around it. It's definitely such an interesting moment in anyone's life, but certainly yours, where it's like so early on in your career, in your life, to see such a tremendous amount of success and momentum and to be a part of something that is really innovative and revolutionary. So how did you sort of embody personally and then also structure this exit in a way where you felt good? Do you have a bench of people at your disposal? Were you well resourced at that time? Was there anything you would have done differently?
I mean, if I could be honest, for my first startup, part of what held me back, and I think that was different for my venture fund, but part of what held me back from going full in and just saying like, screw you, JP Morgan, I'm just going to start this business. I think I was insecure about what the outcome was going to be. And if you'd looked at my life thus far, I had checked a lot of boxes. I had gone to an Ivy League school, and then I'd gone to law school and kind of like done all these things. You know, when you would meet people at cocktail parties, they would nod their head and be like, oh yeah, Jenny's a rising star at a fund or, you know, a bank or something like that. And I think there's a lot of ego involved in that. It was hard for me subconsciously, even though I didn't really experience it consciously necessarily, but I think it was like very hard for me to walk away from that because I'd spent so much time making sure that I had checked all those boxes. To walk away from it was scary. There were a lot of unknowns, and a lot of it was just in my head because like, I don't know, I'd saved a bunch of money. So if like the startup didn't work out, like it was going to be okay. There was a lot of things like my family was supportive, like everyone was supportive, but I felt it was more of a personal brand for me. What if you didn't succeed for the first time in your life, Jenny? And so that's kind of what it came down to. And I think with my fund, there was some of that as well, where we had like built a track record. Scott and I, my co-founder, had checked so many boxes. Like we'd worked together for many years. We'd invested together for many years. Funds were doing really well. Like we checked a lot of boxes. Well, what was holding me back from leaving? I mean, part of it was that I did love my job and I loved working at Techstars. But part of it, I think, was like everyone associated me. Like people, I don't even think like knew my last name. Everyone just said Jenny from Techstars. And that became part of my personal brand. The thought of leaving that, I think I had moments of like, I wonder if I'm going to still be invited to the party, so to speak, right? Our founder's going to want to work with me when I'm dissociated with that larger brand. Am I going to be invited to events, to speak at events? Am I going to be invited on podcasts like this? So I think that there was insecurity there about what was me and what was the brand that I was bolted onto for a long time. And I think I had that in both experiences, both as an aspiring founder leaving a big brand and also as a fund manager striking out on their own.
And yet you did it, Jenny. You overcame through courage and through your own sort of sense of self, the greatness of what you achieved through separating yourself from like the known and stepping into the unknown. You seem to have found just the most tremendous power and sense of self in all of that. It's really amazing.
That's very sweet. I think, you build a community and your community supports you. So you were asking like, did I have kind of a board of advisors who was helping me? I mean, I think everyone does. Like so much of the community was rooting for me and it really means a lot. I remember posting a LinkedIn thing about my new firm and just like thousands of people reaching out in support. And that just kind of means everything. Founders and co-investors and, people in the ecosystem I'd gotten to know. And, I do think you kind of need that support. It's really hard to do that without. In the first experience of my startup, it actually wasn't like that because people really thought I was nuts. Like my community were people that had gone to Columbia University who were in law and banking and finance and at McKinsey and whatnot. And they were just like, I'm sorry, what? You're leaving JP Morgan to do this like wacky thing in your living room? And that was hard. And so the way that I dealt with that was like kind of hid. Like I basically put my head down and was just like, I have to make this a success. And, the good part was like, we worked really hard. The market timing was in our favor and we actually did have a great exit. The bad part was like, I didn't see my friends. I alienated a lot of people. I put a lot of stress on my physical self as well, sleeping, eating, all those kinds of things because I was so focused on having this have to be a success. And it was just hard. And I mean, I would come home just like totally weeping because I just felt so uncertain about everything and just have a hard day and not feel like I did have that support in that community. And you know me, I'm not a weepy girl. So
well, let's talk about money. Obviously, you're building your wealth. You have an exit at a young age. All of a sudden, money's changing for you, right? And I feel like money, it's like they tend to say, you really see how someone is when they have all the money that they want or they have more money because they become more of who they are, right? They sort of can really lean into who they are. So as your wealth was continuing to build and navigating, and obviously exits can be a tremendous life pivotal moment that help you see the world differently, where did you start to invest your money differently? At that time, where had your money been concentrated? And then did anything go off where you were like, okay, now I can do this, or now I'm going to make this move?
Yeah. So you can imagine being a venture capitalist, most of your cash is tied up in very high risk, very early stage companies. And so to balance that out, I always thought, okay, what's the antithesis of that? And for me, that was always real estate, right? And so started buying properties here and there. And that felt like something that was safe, that was an annuity for the future, was something that, I always appreciated the physicality of it and the longevity of it, which felt very different than a fleeting startup. Again, not sure that was like the best place for a young person to put their money. So not necessarily suggesting it, but it felt like the counterbalance for me. And
how old were you when you bought your first piece of real estate?
I was in my 30s.
You put a lot of money down for a place, right? It's a different asset, not wanting to go into debt or like wanting to pay cash. So what did it feel like when you were like, all right, I'm going to do this first real estate purchase?
Yeah. I mean, I think it felt really exciting actually, because, I've been used to startups where you can lose it all. And I was like, I don't know, you buy an apartment in Notting Hill in London, how much can you really lose? So I think it felt exciting and it just felt very long term. I was thinking for the future. That was kind of a cool moment. So yeah, I think it was all about figuring out balance. How can I take the risk I do in my day job and counterbalance it with something that felt very secure with a lot of longevity, something you don't really need to manage that much or throw a lot more money into, kind of manages itself. So that's the way that I thought about it. It is very funny because now I have a financial advisor, and when I want to invest in something that's startup-y and it doesn't fit our fund thesis, like I'll write an angel check. We had this like intense conversation in 2024 where he was like, I cannot work with you anymore if you put any more money into startups, Jenny. Because he's like, you're so over allocated. He's like, I feel like I will not, have a job. I was just like, dude, I can do whatever I want with my money. But I totally hear him. You just become like an addict. You become obsessed with these founders who are building the future, and all you want to do is fund them. Even if it doesn't match your fund thesis, you just believe in them so much. Actually had one yesterday. I talked to this incredible woman in Europe who's building this amazing social club meets community. And I mean, this is just something that we absolutely would never invest in through Everywhere Ventures, but I loved her energy. I love the mission. I want to be part of that community. And so I want to write her a check, right? And so don't tell my financial advisor.
Oh my gosh, I love that. And so obviously through Everywhere, you get so much deal flow and access, and it feels like everyone wants to be with you at Everywhere. And when it comes to your personal real estate empire building and sort of what that looks like, it's certainly different, I imagine, because not everyone knows you as Jenny who invests in real estate, right? Everyone knows you as Jenny, the venture capitalist. As you've been sort of growing your real estate portfolio, or even just looking at what those opportunities have been for you, where did you sort of source it? Was it like, oh, it's time now to sort of sell this property and then buy another one? Was it more intuitive, like, oh my gosh, I just saw this listing and this seems like a great thing?
Well, I want to be clear. I do not have a real estate empire. I have a few properties. Honestly, for me, it's just opportunistic and places that I feel have resonance with me and my life. Born and raised Manhattanite, love being able to invest when I see, an opportunity here. Again, I don't have a million properties, but, I've invested in a couple of things here that just feel like, wow, this is part of my history and maybe my future. And so also my place in London as well. It's like I lived in London for a few years. I'm so excited about that ecosystem in general. Europe might be going through a moment, but I do feel that London is just one of those places that are always going to be such a center of the world. So I do think of that. And then sometimes I do crazy things. Like I bought some property with some friends. Actually, it's in my book. If you read the Mexico chapter, down in a place called Oaxaca, but down by the beach. That was just a passion where I thought, you know what, maybe I want to retire down here. And so I just started spending more time down there. And we had an opportunity, one of our Mexican partners, to buy some property there. Yeah, I think they've all been less about, is there upside here? And more about, are these places that I think have long-standing presence in the world? And do I want to be in those places? So I guess that's the strategy.
I love that. You've spent so much time with founders. I imagine it's probably the largest group of people you spend time with is hanging out with founders. And for you, with your own founder story, coming from this sense of having, let's say, some financial security yourself going into your business, as you've been working with founders now, let's say your entire career at this point, and you sort of are thinking about financial stability or what that afforded you to be able to say, okay, I have the resources to build this product and I can do so and divorce myself, my personal bills, let's say, from the bills of the business. What have you noticed with, let's say, founders in general or some of the climate today around just this concept of personal finance and business finance, which in the early stages feel like they're so intertwined?
Many founders bootstrap their businesses by putting on their credit cards, which I actually appreciate, but do not recommend. I think it is a very binary and scary strategy. So while I do appreciate the bootstrap, I did it in a different way, which was like I took a high paying job, saved all my money, wasn't going out buying bottles of champagne like many of my colleagues were on the weekends. I would just like put all the money away so I could do that. The other thing I want to say is like follow the founders. Founders have a good nose for these things. So I'll tell you a funny story. In 2014, 15, I guess, I was working at Techstars and I met these visionary founders from Europe, told me all about Bitcoin. I didn't know much about it. Came to New York, they ended up joining my Techstars program, kind of educating us all in the cohort about the future of cryptocurrency. And they really had a vision. I think they helped everyone get their wallets up. And kind of as a fun thing, I think most of us put some money in because we were all learning about it and they were kind of educating us about it. And so we all put some money. Well, I had more money than most of the other founders because I was older and a little further along. So like I put the most money in Bitcoin in 2015 and wow, that has worked out for me. So I always joke that the founders really have the nose for the future. And that sometimes can be the financial future as well. It's not just products that they're building, but it's really where the world is going. So I think that's also a good example of, I didn't know anything about it. There wasn't even much information on the web about it. But once I kind of got interested in cryptocurrency through these founders, I started meeting other founders, educating myself, learning about it, decided to make some investments at that time and worked out. So the founders are really the eyes and the ears of what's happening in the future. So I love being able to be part of those communities because I'm not the ones that know about this, right? They're the ones that are educating me. We started investing in AI in 2017 because all these founders were bringing us these really interesting automation cases. And obviously they weren't the LLMs or the ChatGPT-4 that we have now, but they were early iterations of it. And this just idea of where the world was going in terms of automation. And we were able to see that future with the founders and get into some like great AI deals early on.
Wow, that's so fascinating. And so Jenny, as you're sort of looking at your own future right now, you are published author, thought leader. People know you for how bold you are and your thesis and your investment strategies with Everywhere. How are you sort of seeing your future roll out? What are the impacts and legacy and the things that you are calling in and you really want to see happen in the world for yourself over these next 20, 30 years?
Part of the work that I do and I really like doing is really around female founders and a lot of the amazing women in my community. We just had our Women Investment Summit, a few hundred women, partnership with Google and Goldman Sachs. So I love bringing education, content, knowledge, community to many different people and supporting female founders, female investors, and people that are just trying to make a more diverse tech ecosystem is something that's really important to me. So I love spending time on that. I know that's something that's important to you as well. And I think within that, there's a good amount of it that has to do with wealth. It has to do with understanding how to control your destiny, which a lot of that is about managing your money. Unfortunately, I feel that people delegate that to other people. So I'm very outspoken about having to really take control of that, understand your finances, understand why it's so important to control your cash, to know where it's going, and to have really good diversified portfolio and people that can help you, but not to outsource it or to delegate it or to have someone else in your family kind of deal with it. It's definitely an area that I'm kind of always banging the table, whether it's with my friends, founders that I work with, colleagues. I think it's really important. And all too often, you look at women in our industry, especially in venture capital, you sometimes see people getting managed out. You see them not necessarily getting the pay equity that they should get. So I always encourage women, start your own firm, control your destiny, make sure you're a GP, understand the purse strings, understand where the money's coming from, be in control of the money, right? And I think that's something that we need to get the message out.
I think that's great. On your own sort of, I like to call it the bench. It's like for me, if I'm going to make a decision, I call my tax accountant. I'm like, okay, what is the implication of this? I feel like there are those people that we call to seek advice from. Who is on your speed dial, right? When you think about
it's not my financial advisor, because he just yells at me.
Who else is on your bench? Is it a lawyer that you speak to? Is it sort of making key decisions or looking to call in advisors to do specific things for yourself? Is there anyone on that bench that you think has been critical?
Honestly, I wish I could tell you I had this great built out group, a sounding board, but it's really my peers. I mean, I'm a huge believer in peer learning. And so I have probably 3 or 4 fellow venture capitalists, and we're always on WhatsApp comparing hey, not just deals that we're working on, but what did you think about new cryptocurrency or something like that? And so I think it's really my peers understanding how they're managing, because they're really the only ones that understand this crazy world that we live in, where it's so high risk and obviously very high reward if it works out. But to have people that have also had some success or have gone through the journey, the many years of not having success in the industry before things start working out, for me, those are the people that I can really count on. And I have about 3 or 4 peers that I've kind of grown up with in the industry. I'm actually seeing one of them for lunch tomorrow. And we're always just talking about different types of hey, have you heard about, I don't know, I got to tell you the funniest thing. Years ago, I invested in ATMs for weird, literally where you get your cash. I made a killing on those ATMs. Someone told me about them, that you can invest, essentially buy ATMs in the Midwest in grocery stores. And I started researching it and I invested in it. So I think things that are non-correlated with your day job, obviously ATMs, which I don't think I've used one in a decade, is very non-correlated. So I like that concept. And I kind of have a group of people that are circulating really interesting, wacky ideas, because they've also gone through what I've gone through and they are in a similar spot.
I love that. It also just speaks to true diversification of things. There are so many ways that our money can make money for us in ways that we may not even think about, or in ways that are not sexy, but are very profitable or stable. And I think it totally speaks to getting creative about how we say yes to things.
And the financial advisor is I'm sorry, what is this check from? I'm oh, those are my ATMs from 15 years ago. He's WTF, Jenny, what? I'm yeah. Apparently in Milwaukee, I own 50 ATMs.
That's so amazing. I'm so going to look into ATMs now. I'm okay,
I know. I think it might be past it, but I think we'll have to find the next thing, right? I mean, again, what's so interesting about our world is that it's just developing in real time and there's always opportunities. And I want to share those with my peer group. And, I think we can have fun learning and hopefully profiting together.
I love that. Insatiable curiosity met with a little bit of capital can lead to incredible results.
Yeah, and just small amounts. I mean, when I bought these ATMs, I did not have a lot of money. I mean, we're talking about a few $1,000s here that's really magnified.
Wow. Yeah, that's so amazing. So Jenny, for our listeners who are venture curious, who are interested, who've been hearing about venture capital, who know all the stats about why they should be investing in venture around innovation and sort of thinking about what to do with their money in that capacity. Can you provide a little bit of some of the nuts and bolts or some sort of guiding rails, if you will. One of my fears around some of the conversations have been, hey, go invest in venture, but there's not a lot of contexting. Who's it for? How to sort of think about it. And I know we could talk about this all day, but if there were some quick bullets of how you guide someone to think about contexting this.
Yeah. Well, I think you have to think about, your larger portfolio. And within that, private equity is a very small component. That's high risk, high reward. And then venture capital within private equity is the smaller little slivers. I think if you think about the pie and are really planful about how much you want to put in that every year, I think you can have like a really interesting portfolio that maybe balances out some of bread and butter stuff. I like to think about it as like almost like dollar cost averaging, right? I'm going to put $3,000 into, a high risk asset class every year. And like, we'll see that compound and some of that won't work out. And some of that will turn into 50x or 100x because that is how venture works. But I think you have to be committed to the asset class. You can't just get in it because we saw so many people do that in 2020, 2021. They lost all their money and that's it, as opposed to they'd been investing for a decade, small amounts, and 2020 and 21 was just kind of a blip. And they keep on investing in the down years and the up years and think of it more as an annuity in that way. So I like the idea of thinking about it in terms of dollar cost averaging and having a commitment. Like I'm going to commit $10,000 to early stage venture. And I'm going to do that over a period of 5 years. So I'm going to get time diversification, asset class diversification, and I'm going to be very methodical about making sure that money goes in, even when it's a scary time, like when the market drops and all of a sudden everyone hates venture. Well, I'm still going to invest because you know what? Those are actually the best investing years. When everyone's rushing in, those are kind of crappy vintages. So being methodical is the number one thing within venture.
Absolutely. I also want to just double underscore when you're investing through a fund, you are trusting someone who's looking at hundreds, if not thousands of deals rather than sort of cutting a check to the first company or a friend of a founder who says, hey, can you give me some money here? And so can you help us highlight in the course of your experience of looking at opportunities, how many deals have you looked at, Jenny?
Well, to give you a sense, through our website, like people that cold inbound, we get about 1,200 per month. Then through our community of founders and operators, we probably get another 250 to 500 a month. We're looking at all of this. We're seeing patterns. We're meeting with hundreds of founders before we invest in one. So I'd say the ratio is pretty high, but directionally we're seeing thousands and investing in a handful.
Yeah. And I think that ratio is really important to also highlight because I know there's a lot of conversation around investing in individual companies through special purpose vehicles. And I think for the astute investor who spends time understanding how to diligence or is putting, let's say, such an insignificant amount of money that maybe it's not on the top of their mind to sit down with it for so long, that investing through a fund, I think, is one of the best ways to get opportunities across a variety of businesses with that capital. And I think the lens needs to be shown back and I think highlighting funds as much as we're talking about individual angel checks.
The way that I would think about angel checks or SPVs is as a portfolio. So again, I don't think you put all your eggs in one basket, even though you think it's the best deal since sliced bread. You basically say like, I'm going to put $100,000 over 5 years into a variety of deals that I'm going to co-invest with other people who might be doing this full time. And in that, I'm going to invest in 15 deals, 10 deals, whatever it is, so that I get, again, time diversification, vintage diversification, and I get to look at a lot more things. So I think the best way to do it really is if it's an SPV, it's a direct, don't think of it as a single investment. Think about, I've allocated my money to this asset class. Now I'm going to divide it amongst 10 deals or 20 deals or 15 deals over a period of time. So I don't have that concentration in one vintage year, 2 vintage years, which can be tough. You really want to have some more breadth there. So that's the way I think about it. Otherwise, yeah, I think it's great to be an angel, but I think you have to be in it for the long term again, as opposed to kind of dipping in and out on one deal here, one deal there. You really got to be committed to looking and being part of the kind of ecosystem.
I love that. Thank you for that, Jenny. Obviously, we've talked a lot about money. We've talked about investing it. We've talked about saving it, that we can buy homes, ATMs, all sorts of things. But I would love to know, what have been some of your favorite things or ways in which you have spent your money?
I wrote a book called Venture Everywhere. So I really spend my money on experiences. I have one life to live and I want to experience as much as possible. So I save my money for those trips. Last year, I got to go to Saudi Arabia. I got to go to Kenya. I mean, I took some magical trips in the last couple of years. And so that's actually where I spend my money. I save it to spend it there on experiences that bring me joy.
I love that, Jenny. And, our audience loves to support the women on the show. What is it that you are calling in right now? What can we do for you?
Yeah. I mean, if you want to check out the book, I would love that. You can write me an Amazon review. That would be fantastic. Really, the book, it's not a business book. It's not even about venture capital. The book is really about charting your own path and creating the life and the world that you want to see. I hope you get inspiration from the founders that I interview, from some of, my stories that I share, which are very personal. So it's definitely a very look inside of Jenny. Hopefully it inspires you to take the next step, whether that's in your life or your career, to make a positive impact for others and for yourself.
Wonderful, Jenny. What a gift to have you on the show today. Thank you so much for sharing your story on Getting Rich Together.
It's been so fun. Thank you for having me.
Thank you so much for tuning into this episode of Getting Rich Together. Please take a minute to subscribe. And if you like this episode, I'd love it if you could share it with a friend who is ready to elevate their financial future. Until next time, let's keep getting rich together.